Hi and everyone. Welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025-2026 are your golden opportunity, and I am here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today. Prepare smartly and make your promotion in 2025-2026 a reality. Welcome to part 17 of my Path to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear, practical, sample answers about case studies and group discussions to help you climb the career ladder faster. The subject: some case studies about day NRLM guidelines. Previous case studies link available in description. Case study: formation and account opening for a new SHG. Scenario: a group of 12 women from a tribal village approaches your branch, form an SHG. They have been saving ₹50 each per week for the last 4 months. They now wish to open a savings bank account. Questions: what are the key eligibility criteria for this group to be recognized as a day NRLM SHG? What KYC documents will you require for opening the savings account? Can a business correspondent BC open this account? Solution: the group must have 5 to 20 members, 10 to 20 for general SHG, minimum 5 for tribal or difficult areas. This would be practicing Panchasutras, regular meetings, savings, internal lending, etc. Existing for 3 to 6 months makes them eligible for revolving fund, but for a savings account, active existence with regular savings is sufficient. KYC verification should be done as per RBI's master direction on KYC. For the SHG account, the entity's proof and KYC of the office bearers are needed. For individual members, KYC is not a prerequisite for the SHG account opening or credit linkage. As a business correspondent can open the savings account subject to the bank's board approved BC policy and adherence to extended BC guidelines. Let's study. Request for revolving fund RF. Scenario: the Joy Ma Durga SHG has been active for 5 months. They maintain proper books of accounts, hold regular meetings, and have a good record of internal lending and recovery. They have not received any RA earlier and now apply for it. Questions: is this SHG eligible for the revolving fund? What is the purpose and typical amount of the RF? Who provides this fund? Solution: yes, the SHG is eligible. It has been in existence for more than 3 months, follows Panchasutras, and has not received RF before. The RF is provided as a corpus to strengthen institutional and financial management capacity. The amount ranges from ₹20,000 to ₹30,000 per SHG. The revolving fund is provided by the Ministry of Rural Development under Day NRLM. Case study: the first dose of credit linkage. Scenario: Usha Kiran SHG has a corpus of 20 to 25,000, including savings and RF. They have been graded A by the local federation. They approach the bank for their first loan to start petty trade and animal husbandry. Questions: what is the minimum loan amount they are eligible for in the first dose? Should it be a term loan or cash credit limit? What documentation is required? Solution: the first dose is 6 times the existing corpus or a minimum of ₹1.5 lakh, whichever is higher. The 6 into ₹25,000 is equal to ₹1.5 lakh. Therefore, they are eligible for a minimum of ₹1.5 lakh. The SHG can avail either TL or CCL based on their requirement. For a lump sum investment in specific activities, a term loan might be suitable. The bank should use the common loan application form revised by IBA. The microcredit plan prepared by the SHG and approved by the Federation is crucial. Grading certificate from the Federation or NABARD should also be obtained. Case study. Request for a cash credit limit. Scenario. A well-performing SHG which took a 5 term loan of rupees 2 lakh and repaid it promptly now request a flexible credit facility to manage their fluctuating working capital needs for a collective grocery store. Questions. What type of credit facility is suitable for them? What should be the sanction limit and durations for a CCL? How is the drawing power for the first year calculated? Solution. A cash credit limit is the most suitable facility for working capital needs. The bank should sanction a minimum of rupees 6 lakh for a period of 3 years with the yearly drawing power. DP for the first year is 6 times of the existing corpus or a minimum of rupees 1.5 lakh, whichever is higher. Case study. Loan applications from a defunct SHG. Scenario. Chandrasekhar SHG was formed 2 years ago but became inactive due to internal disputes. With the help of a bank mitra, they have been revived and have been actively following Panchasutras for the last 4 months. They now apply for a loan. Questions. Is this SHG eligible for a bank loan? What conditions must they fulfill? How should the bank approach this case? Solution. Yes, existing defunct SHGs are eligible for credit if revived and active for a minimum period of 3 months. They must be practicing Panchasutras and should be regraded by the Federation Support Agency. The bank should treat it as a new SHG for credit linkage purposes. The branch manager should attend one of the meetings to verify their inactivity and the MCP should be thoroughly appraised. Case study. The individual loan to an SHG member. Scenario. Sita Devi, a member of a mature SHG, 3 years old, with 2 successful bank loans, wants to expand her tailoring unit and requires a loan of rupees 8 lakh. Questions. Can an individual SHG member avail a loan of rupees 8 lakh? What are the eligibility criteria for such individual loans? Are there any special schemes for such entrepreneurs? Solutions. Yes, banks may consider extending loans up to 10 lakh to individual members of select matured, well-performing SHGs. The SHGs should be more than 2 years old and have accessed at least one dose of bank loan with timely repayment. The individual must be running a viable economic enterprise. She can avail the Mudra loan up to rupees 1 lakh under Shisu category and is also eligible for benefits under the Women Enterprise Acceleration Fund for credit guarantee fee reimbursement and interest subvention. Case study. Security and margin for a large loan. Scenario. An SHG requests a loan of rupees 15 lakh for purchasing a flour mill. Their existing savings in the bank account is rupees 2 lakh. Questions. Is collateral security required for this loan? Is any margin money required? How is this loan covered under a guarantee? Solution. No collateral security should be obtained for loans to SHGs up to rupees 20 lakh. For loans above rupees 10 lakh and up to rupees 20 lakh, a margin not exceeding 10% of the loan amount exceeding rupees 10 lakh may be obtained. Here the excess is rupees 5 lakh, 15 to 20, so a margin of up to rupees 50,000, 10% of 5 lakh may be obtained as per bank's policy. The entire loan, even if subsequently goes below rupees 10 lakh, would be eligible for coverage under the Credit Guarantee Fund for Micro Units (CGFMU). Case study. Dealing with a member who is a defaulter. Scenario. During the documentations of a loan for Lakshmi SHG, it is found that one member, Geeta, is a willful defaulter on a personal loan from another bank. Questions. Should the bank deny the loan to the entire SHG? How should the bank deal with Geeta? What if the defaulter is non-willful? Solution. No, the bank should not deny the loan to the entire SHG. Loan should not be denied because a family member of an SHG member is a defaulter. The willful defaulter, Geeta, should be excluded from the credit facility while documenting the loan. However, she can continue to benefit from the thrift and credit activities within the group. Non-willful defaulters should not be debarred from receiving loans. If the default is due to genuine reasons, the bank may consider restructuring the credit facilities as per RBI norms. Case study: Purpose of loan and repayment schedule. Scenario: An SHG sanctioned a term loan of Rs 5 lakh, third dose. Their MCP indicates that 60% of the loan will be used for buying sewing machines, income generations, and 40% for house repairs, social needs. Questions: Does this usage comply with DA NRLM guidelines? What should be the repayment period for the third dose loan? What happens if the loan is not used for the purpose stated in the MCP? Solution: For loans above Rs 4 lakh, at least 75% should be used for income generating purposes. Here only 60% is allocated for income generations, which does not meet the guidelines. The SHG must revise its MCP. The repayment schedule for a third dose term loan is 48 to 60 months in monthly or quarterly installments based on cash flow. The bank, through its field visits and monitoring, would ensure end use of funds. Diversion of funds can affect the SHG's creditworthiness and future loan eligibility. Case study: Recovery and NPA management. Scenario: Ganga SHG has an outstanding term loan of Rs 3 lakh. They have missed three consecutive monthly installments due to a local flood affecting their businesses. Questions: What immediate steps should the branch take? How can the day NRLM structure assist in recovery? What is the bank's reporting responsibility in this case? Solution: The branch staff should personally contact the SHG, understand their genuine problem, and explore the possibility of restructuring the loan as per RBI norms. The branch can organize a joint recovery camp with the district mission management unit. The bank Mitra or Saki and the village level federation can also help in counseling the SHG. The branch must list this SHG as a defaulter in the monthly report submitted to the block level bankers committee and the district consultative committee meetings. Case study: Interest subvention claim. Scenario: Your branch has disbursed loans to 15 eligible women SHGs during the quarter ending June 30, 2025. All accounts are standard. Questions: What is the applicable concessional interest rate for loans up to 3 lakh? At what rate will the bank be subvented for these loans? What is the process for claiming this subvention? Solution: The concessional interest rate charged to SHGs is 7% per annum for loans up to Rs 3 lakh. The bank will be subvented at a uniform rate of 4.5% per annum, effectively reducing its lending cost. The bank must ensure these SHG accounts are correctly flagged in the CBS with unique daily lending codes. A quarterly claim certificate as on June 30 must be submitted to the nodal bank through the web-based portal. The annual claim for the quarter ending March 2026 requires a statutory auditor certificate. Case study: Role of federations and financial literacy. Scenario: The zonal manager notices low credit linkage of SHGs in a particular block. The SHGs complain they are not aware of bank procedures. Questions: What role can federations play in resolving this? How can financial literacy be promoted in these villages? What is the role of Bank Mitra or Saki? Solution: Federations can grade the SHGs, help them prepare microcredit plans, MCPs, and act as a bridge between SHGs and the bank. The branch can coordinate with the SRLM which utilize financial literacy community resource persons to conduct village level financial literacy camps. The bank's own financial literacy centers can also be used. A bank mitra, Saki is a customer relationship manager positioned by SRLM to assist banks with improving service quality, follow up for recovery, and facilitating better communications with SHGs. Case study: Data sharing and customer consent. Scenario: The State Rural Livelihood Mission (SRLM) requests a list of all SHG members who have availed overdraft facility under PMJDY. Questions: Is the bank permitted to share this data? What precautions must the bank take before sharing customer data? What does the Master Circular on Customer Service say about this? Solution: Yes, banks are advised to share data on individual loans or OD to women SHG members with JRLM or SRLM in a mutually agreed format. The bank must ensure conformity with RBI's Master Circular on Customer Service. Crucially, explicit consent must be obtained especially and separately from the customers. It cannot be a general clause hidden in the account opening form. Master Circular on Customer Service mandates that banks must ensure the confidentiality of customer information and obtain a specific consent for sharing data. Case study: Women Enterprise Acceleration Fund. A scenario: an individual woman CG member, Rekha, takes a loan of Rs 4 lakh under the CGTMC scheme for a small printing press. She repays the installments promptly. Questions: what two benefits can she avail under the Women Enterprise Acceleration Fund? What is the extent of interest subventions for prompt repayment? Can the bank get reimbursements for the credit guarantee fee paid to CGTMC? Solution: we can avail reimbursement of credit guarantee fees to the bank and interest subventions on prompt repayment. She will be provided a 2% interest subventions on the loan outstanding, limited to a ceiling of Rs 1.5 lakh. Yes, the bank can claim reimbursements of the actual credit guarantee fee paid to CGTMC for her loan. Case study: monitoring and reporting at the branch level. Scenario: the lead district manager (LDM) has asked for the monthly progress and delinquency report under day NRLM from your branch. Questions: what are the key data points to be included in the progress report? What details are required in the delinquency report? To whom are these reports submitted? Solutions: the progress report must include number of SHGs with SB accounts, credit-linked SHGs in the month, separated into new and repeat loans, amount disbursed, and cumulative credit outstanding. The delinquency report must include total number of loans accounts, amount outstanding, details of irregular accounts, number and overdue amount, and details of NPA accounts, number and amount. These reports are to be furnished to the lead district manager (LDM) every month for onward submission to the special subcommittee constituted by the State Level Bankers Committee (SLBC). Thank you very much for your patience. Request for like, subscribe, and share.